Today I've got on my PPC Ian hoodie. You guys know what that means. It's time to talk some dividend stocks. What's going on, you guys, and welcome back to the channel. If it's your first time here, my name is Brandon. As always, we do have our Investing Academy, which is that first link down below. You can also visit our website if you're looking for courses, training as a beginner to the stock market. But today we're going to be covering another topic on passive income stocks, in particular here in Canada. This has to be one of the most requested videos that I get in the comments, on Instagram. People, the viewers, they're always asking for more dividend stocks. They love it, they love it, they love it. I take a moment to say that if you haven't seen the previous ones that I've done a specific Canadian dividend list. I've also done one for US stocks. I'll link both of those down below. I'd actually suggest going to check those out first, because that's more or less like my go-to. Those are kind of like my compiled list that I've really dialed down some of my all-time favorites. And this is more of an update. This is actually kind of like a current day, more of a complimentary video to that one. Again, focusing on the Canadian stocks. If you actually stick around to the end of the video, the last two stocks that we touch on today, I think these are stocks that are looking quite attractive at the moment. If you are looking to add some to your portfolio, those may be some great ideas. Granted that you go do your own research on them after. If you want to jump straight into the stock picks, I will include a time on the screen right here. You can feel free to jump on ahead. I will just say for a brief moment, in the case that we have any new investors, anybody new to the channel or new to dividend stocks for that matter, just as a reminder, when we're looking for a good dividend stock, you often want to balance two things. You want to balance the dividend amount or the yield that you're going to be getting with the sustainability. You want to make sure that this is a dividend that's reliable, one that you're going to be able to count on for the years going forward. Personally, for me, I love aiming for dividends in the 2 to 4% range. I think that that's right in that sweet spot. Of course, we'll see some lower, some higher, but that's the sweet spot where it makes sense. If a company's paying a dividend that is too high, because you will come across double-digit dividends, you'll come across 8, 9, 12, 15% dividends. To me, what that says is that the company may not be allocating their funds best. They may not be using that capital to the best of their abilities if they're paying that much out in dividends. If we boil down to the basics and remind ourselves what a dividend is, this is the company earning profits. This is the company's net income, and they're taking that and actually kicking it back to the shareholders. So when the dividends are too high, to me, that says maybe the company should be using it better. Maybe they should be using that to actually grow the business. More or less just, is it the best decision for the company? It may also represent that the share price, that the company's stock is dropping lower and lower. If a company is performing very poorly, you will see the yield correspondingly go up. I've actually made videos on that previously if you want to search the channel, but quite simply, you could buy into a great dividend and your shares could lose 40, 50, 60, 70% value. You don't want that. So you like aiming for that sweet spot. Of course, then that has to be complemented with the sustainability. It's one thing that a company can pay a dividend. It's another for them to continue paying that dividend going forward. And this is where we look to things like the track record. This is absolutely huge because a company that has proven to have done it in the past often can do well in the future. That's not always the case, but that really can be telling. More or less, as I hope to display during this video, is that we're aiming for companies that are very reliable. Companies that are in sectors that aren't as volatile. They can get very, very consistent streams of earnings, revenue, cash flow, and then reward the shareholders and kick that back. That's kind of my little spiel on dividend stocks. Let's dive on into the video. If you enjoy, by the way, I would really appreciate it if you take a moment to drop a thumbs up. That really, really does help. But let's dive on into our first pick. And this is one that is all over the comment section. It is the company Emera. The ticker is EMA. And today we are looking at a dividend of 4.6%. The payout ratio, which is how much the company's paying out of their earnings, how much of that profit they pay out. Today it's looking like about 75%, which is right in the ballpark of what they historically average. Emera is one of my all-time favorite companies in terms of energy and utilities, as they are actually a holding company based out of Nova Scotia. As you do see, however, Although based over on the East Coast, majority of their business is actually derived from the US. So areas like Florida. And it's actually fascinating. This company has more business down south than it does here in Canada. But in terms of the dividend, overall, it's a very solid one. They've grown it at about 6% since 2000, since the year 2000, and they are projecting that to slow a little bit, but they're still projecting growth of that dividend of about 4 to 5% over the next couple of years. As we can see from our dividend all-star list that we cover from time to time that lists Canadian dividend stocks, Emera has showcased 13 years of consecutive growth, that is payouts and increases of the annual dividend. And overall, this is just one of those solid, reliable companies, albeit in more or less boring sector, the utility sector, the gas sector. They really do benefit from kind of just a growing population. I know that's kind of a weird one to say, but as more people populate this earth, more people need their services. And what's fascinating about them is they're a Canadian listed stock, so you can buy them here on the TSX, but they do give you exposure down south. Rather than going out and buying a Duke Energy, for example, or even Fortis, which is one of our other favorite utility companies, Emera is one of those very unique ones with a very high US exposure. Today, the stock trades for $55 Canadian. Moving on into our second stock for today's video. I know this one's a bit boring, but I don't think it would be right to do a Canadian dividend pick video without including one of the banks. It's the company Royal Bank of Canada. Ticker is RY. And today we're looking at a dividend of 4.48%. The payout ratio is right smack down the middle with a 55% payout ratio. As a fun fact, for a lot of you who won't know, Royal Bank is not only the largest bank here in Canada, it is actually the largest company publicly traded on the TSX. If we're looking at market cap, this to me is one of the most diverse banks that you'll come across. And what I do like about this is that it does keep the primary focus here in Canada. Unlike TD, which is actually expanding quite a bit into the US, Royal Bank derives over half of their revenues here in Canada. Again, very diverse business line. And in terms of carrying that over to the dividend, they've been able to display that really well with a growth rate of over 7% dating back over the past decade. And to me, overall, you guys know how much I love the banks. You know how much I think they should be part of almost anybody's portfolio, at least maybe one of the banks, your favorite bank. Today, looking at Royal Bank, stock is trading at a PE of 12. So 12.4 PE, able to grab you a 4.48% dividend, one of the more reliable dividends here in Canada. To me, this is just an absolute no-brainer. The stock today trades at $96 per share, and that is the company Royal Bank of Canada. On to number 3. And I know some people are going to get upset about this one, but hey, it's just a little curveball. It's just a little fun. It's kind of tweaking the rules here. It's the ticker CDZ.TO, and this is the iShares Canadian Dividend Aristocrats Index ETF. Today, the distribution that we're looking at is 3.62%. And of course, being an ETF, an exchange traded fund, this isn't a particular stock. This is a combination of 81 holdings, 81 dividend aristocrats. Their definition here, or the way they define it, is this ETF is comprised of large Canadian companies that have raised their dividends for 5 consecutive years, being a dividend aristocrat. If we take a look into their holdings, you'll see that this is a very evenly weighted portfolio. In fact, what I find fascinating, there's nothing over 3%. It is very evenly weighted, with the top holdings today in TransAlta Renewables, Northwest Company, Interjex. You do see a couple more well-known names like the CIBCs, the Bell Canadas, the Enbridges, but this is actually one of Canada's, if not the largest, dividend aristocrat ETF. Today we're looking at net assets, so the amount of money that's invested in this fund, of over $778 million. The MER, however, that does come with this, of course, with an ETF, there are fees. MER that we're looking at today is 0.66%. So something to be aware about. That is by no means a cheap ETF. You'll find much cheaper ETFs as you get more broad and you just kind of play the broader indexes. But as you specialize into ETF that covers dividend aristocrats, you do see that creep up. It's actually quite comparable amongst its competitors. I took a look amongst all of them, and this is obviously just a fun one. This is fun for somebody who maybe an index investor and you don't feel comfortable going out and buying individual stock. You don't, for whatever reason, don't want to take on that risk of putting your money all in one company. Play the field here. You're looking at 81 holdings. The ETF trades for $24.62 Canadian under the ticker CDZ. Now, in moving to a stock that I'd like to really emphasize, and we covered this in the last video, I leave this stock towards the end for a very good reason. It is the company ATCO Group, or ATCO Limited stock. The ticker is ACO.X, and today we're looking at a 4.45% dividend. Wonderful dividend, a 51% payout ratio, which is actually, if you look into ATCO, they're usually hovering at a bit lower than that in the 30 to 40% room. But this is a Canadian holding company that we cover from time to time. As we know, one of their subsidiaries, one of the companies under their umbrella is Canadian Utilities, the longest increasing dividend company in Canada. ATCO has been increasing it for a pretty respectable time as well, 27 consecutive years. But this holding company gives you exposure to energies, gas, utilities. They actually serve over 2 million customers around the world. And when we look for a quality dividend stock, this one is very well rated. They've got a very safe dividend rating, or a very safe credit rating, along with a very safe dividend. I leave this stock for the latter part of this video because I do think that it could be an awesome stock for someone to look into as of filming this. And I mean, today I'm filming this video, it's October 19th, Monday. So depending when you're watching this, you can, it may not be the case, but as of today, looking at the share price, we're looking at a PE ratio of 11.9, so a 12 PE. The stock's trading at $39, and the stock is down about 28% off highs. This to me is one of the most reliable companies out there in dividends. They're giving you exposure to construction sites. They're giving you exposure to utilities. They're giving you exposure to energy. All in all, a very reliable dividend with, again, in my opinion, maybe a potential time to add if you are looking for some good dividend exposure. And that leads us on to our final stock for the video, which is another stock that I am absolutely loving at the moment. This is a stock that today we're looking at a 5.6% dividend. We've got a lot of questions. We got a lot of comments on this stock. It is the company TC Energy. The ticker that you'll be looking at here is TRP.TO. We're looking at a payout ratio of about 68. And this is, of course, the company that was previously known as TransCanada Corporation, now known as TC Energy. This is the North American energy company that is based out of Calgary, Alberta. They operate, however, in Canada, US, Mexico. You'll know some of their pipelines. They're involved in natural pipelines, liquid pipelines. Their natural gas pipeline actually supports, as a fun fact, over 25% of North America's demand. So when we look at the dividend, we see that they're able to grow it at 7% historically. Well, they are a big player in the space. They have been a big player in the space. And as we can see that over the past number of years, they've actually ramped up those dividend increases. This stock, of course, being that it is an energy play, and we could say this about a lot of companies, but TC Energy in particular, as they do face a lot of political risk. Well, energy companies in general are really quite volatile. That's something that I think anybody should understand before getting into these stocks. You know, you don't want to be sucked in by a great dividend and then not be able to handle the ups and downs, because with a stock like TC Energy, I wouldn't be surprised to see some volatility. A constant issue that you'll be dealing with is these pipelines getting approved and people voting for and against it. That's almost more or less what comes with it. But that said, this is still a top tier play. I mean, a 5.6% dividend, I absolutely love it. It's an amazing stock, an amazing dividend. And if we do look at how it has performed over the past little while, we have seen a sell-off. The stock is down similar to ATCO, down about 25%, which is why we're seeing this dividend yield creep up. That's why I leave it for the end as another one to look into, if you feel that it's the right stock for you, if you can handle investing in the sector. But today the stock trades for $58 with the 5.60% dividend. But that right there is the updated look at some of the dividend stocks on my radar today. Some of the top Canadian dividend stocks that you can go out and buy for passive income, especially with those last two that we just covered. I'll reiterate, if you haven't seen the previous videos that I've done, I would say go check those out, because those are some of my all-time favorites. This is just an updated list to supplement that. If you guys enjoyed the video and you like the picks, you can feel free to give this one a thumbs up. That would honestly help out so much. And leave a comment down below. Was there a stock on there that you own, that you like? I'm sure there's stocks on there that I didn't mention and that you own, some of your favorite dividend stocks here in Canada. Feel free to leave those down in the comments. I read them all. If you're not already subscribed to the channel, we post videos like this every single week. So subscribe, hit the bell for notifications so you know when you're notified when I post. And then last but not least, we do always have our Investing Academy. So if you're very new to the stock market, if you're looking for courses, training, if you want to join a community where you can ask questions, meet other investors that are just getting their feet wet, click the first link down below and you can learn all about that. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.